All right, everybody. Hope you guys can all hear me. I hope you guys can all hear me. If you can hear me, respond in the live chat by typing yes, I can. If you can hear me, type yes in the live chat. If you can hear me, type yes in the live chat. We'll be starting very soon. We'll be starting very soon. Starting this live stream very, very soon. So don't worry, we'll be starting very, very soon. Very, very soon. Let's just allow few minutes for others to also join the live chat. Let's allow few minutes for others to also join the live chat, the live session. Let's allow a few minutes for others to also join the live session, and then we'll kick start. It's going to be a powerful session. It's going to be a very powerful session. So share this video, guys. Share this video with your friends. Share it on your status. Share it everywhere. Share it in groups so that they can all join, and then we kick start. It's going to be a very powerful session. It's going to be a very powerful session. Do well, guys. Do well, guys. Do well, guys. Join up. Share the link. Share the link. Share the link. Let's go. Today I'm here for you. Prepare your questions. Okay, prepare your questions. Any of the questions that you have, any doubts that you have, prepare them down. I'm going to what? Answer your questions on this live session. Okay, guys. All right, so I can see someone said he can hear me. So that is great. So I'll be starting very soon. I'll be starting very soon. I'll be starting very, very soon, please. Just want some to give some few minutes for those who couldn't join to join up at once so that uh, we can flow together. So both we and them can all flow together. It's very important. We cannot leave them behind. We cannot leave them behind. We cannot leave them behind. So guys, share the link, share the link, share the link. As you can see, I'm ready for you guys. I'm ready for you guys. Share the link and let's get started. 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 Okay, guys, share the link, share the link, share the link, share the link, and let's get started. All right, guys. So, as I said, today's today we are going to look at what a very important topic, that is how to maximize your wins, and minimize your losses in trading. Okay, this, though I said boom and crash, this can be applied to any asset. This particular topic that I'm taking you through today can apply to what, any asset at all that you are trading, being it currencies, being it volatility pairs, being it indices, being it stock market. You can follow this principle that I'm going to talk about, and then you'll be able to what, to maximize your profit in trading and minimize your losses. Guys, you'll be able to what, maximize your profit, and what minimize your losses. So it is an important topic that we are going to look at today. And if you have any other question on anything, any challenges that you have in trading, you can leave them in the comment section, and I will reply to all your comments and questions. All right, guys. So without wasting much time, those that will be late will have to play the video from the beginning so that they can also follow up. But then those of us that are here, I don't want to keep you waiting, so we are going to start right now. If you can hear me loud and clear, just type yes in the chat box. And guys, don't forget, if you have not subscribed to this channel, do well to hit that subscribe button. Also like this video and share it with your friends. All right, guys, let's get started. All right, so first thing that I need to say here before I even come to the chat to start to do some few analysis with you, to see how you go about some analysis in the market that will make you to risk less but also to maximize your profit. I want to first of all speak to you guys about something very, very important. That is about trading. There is something I realized that we do in trading. Okay, that when I say we, I'm talking about we, the retail traders, those of us that are not institutional traders, or we don't have money like the institutions, that is the banks, the hedge funds and co, to push into the market, but we are trading with our little capitals like $10,000, $100,000, $200,000, $1,000, $100 and co, $50 and co. I want us to what, to look at certain things in depth today. Okay, certain things that are affecting our trading and not making us to get 100% outcome. Okay, when I say 100% outcome, I don't mean you winning every trade. When I say 100% outcome, I mean you making more profit compared to what, losses. All right, now why do we make a lot of losses in the market as traders? Number one is we are not patient in the market. Okay, as retail traders, we are not patient in the market at all. All that we want is to make profit at every single opportunity. But I know there is a saying that not all opportunities are good opportunities. Okay, yes, you see opportunity in the market. Does that mean you should just jump into the market? So I'm going to speak about a lot of things this evening, showing you and telling you why you shouldn't just stand up and jump into the market and begin trading. That is wrong. It is odd. It is wrong. Okay, if you do that, you always end up being part of the liquidity that the big institutions are looking in order to move the market in their direction. So today we will look at how to avoid becoming part of the liquidity that the big guys, that is the big institution, the big guys are looking for, to what, to move the market in their direction. We will look at how you be able to what, escape this particular situation. All right, so for instance, okay, for instance, let's say you as a trader, you analyze the market, you realize that this an area of resistance, or this an area of what, support. Okay, and you want to what, you want to take a trade, but where your support level is, your key support level is, or your key resistance level is so far from where price is that you are not willing to wait for price to get to the zone that you are very sure of, that no matter what, when price gets there, price will reverse. Okay, so you just jump into into the trade from anywhere at all that you feel deemed to jump into the trade from. Now once you do that, you don't know how far the trade that you took, there's going to be a reversal, or whether the trade will just move straight to where you were expecting it to go. This is the reason why you don't just enter trade in the middle of nowhere. Okay, I call it middle of nowhere, because you just jump into the trade at any point in time. It's wrong. Okay, it's wrong. So number one thing that you have to look at in your trading is patience. You should always be patient. Okay, you do analysis, even if it takes 2 days for the price to come to your zone. Be patient and allow price to come to your zone in that 2 days. Why am I saying this? If you are patient for price to come into your zone, taking whether 2 days, 3 days, 4 days, 5 days before arriving in your zone, and you are making maximum profit, is better than you jumping into every single opportunity you see, every second, every minute. There are people who can take 100 trades in a day but still end up in loss. That is not trading, that is gambling. You are gambling away your money. Don't worry, we will look at some analysis today, so don't worry, look at some analysis on the chart. But first things first, we need to look at why we are losing in the market, why we lose money in the market, because this is something that is causing a lot of people to give up on trading. Meanwhile, trading is a very profitable business. It's a very profitable venture. It's a very profitable area of finance that you can venture into and make it big time. All right, it is not a get rich quick venture. It is not a get rich quick business. All right, but it is something that can give you sustainable income. It is something that can do that can give you a sustainable income. So guys, you need to understand these things, and also follow these uh particular rules. And the number one, as I said, is patience. Number two, your risk appetite. Number two is your risk appetite. Number two is your risk appetite. So there are some of you that like to risk a lot of your equity, a lot of your equity. That is really dangerous. It is really dangerous. Always look to risk less. Okay, always look to risk just 1%, maximum 3% of your equity at a time. Okay guys, always risk less. Okay, maximum 3% of your equity. So guys, what I'm trying to say here is, don't just be opening trade. You open a trade, you jump into the trade somewhere, and then you give a stop loss of like 100 pips, and you are looking to make a profit of like 10 pips. Okay, so you are risking like $30, and you are looking to take a profit of $2. That is not trading. You are playing with the market. So if you really want to make more profit, then you should be risking less and gaining more. So if you are risking, let's say $3, you should be looking to make like $35, $14, $15, $10, whilst risking $2 or $3. Okay, and I'll show you examples when I get to this chart. Right now, I'm trying to tell you that these are mistakes we are doing in the market, and we need to desist from these mistakes. We should stop dashing the brokers money. Okay, we are dashing these brokers money. They already have money. They are rich. They are rich. So we don't need to give more of our money to them. Somebody say 100 trades. Yeah, I mean 100 trades. Okay, we most of the time like to what to enter trades, hundreds of them. You understand? We like to what enter hundreds of trades at a time. But it's not about the quantity of what of trade that you are taking. Okay, it's not about what the quantity of what of trade that you are what you are taking. It is about the quality of the trade. That is the key word. The quality of what of the trade, and not the quantity. So if you take 100 trades and you are still what you are still making what making losses, okay, and you are still making losses, then you should ask yourself, okay, ask yourself, am I doing the right thing? Because if you are doing the right thing, you will not even take, you don't need to even take more than 3 or 5 trades to be out to make profit for that day. I'm telling you the truth. I'm being so honest here. I'm telling you the gospel fact. You don't need to what to take that much trade in order to do what, in order to make profit. For instance, today I took only 2 trades. I took 2 trades today. My student can testify to what, to that. My boot camp students will testify to that. I took just 2 trades today. Okay, that is what. One is what you are seeing on the screen right now, which is this guy, boom what, boom 500. Okay, I analyzed this thing in the morning. I analyzed it at dawn, where a lot of you were what, sleeping. That was when I analyzed this, and I went for this zone first. I realized no, this zone is not going to what, to hold. I risked little on it. It spiked into what, into profit a little. I closed it. Why? Because I knew there is a big better zone down here, okay, which I was looking at. And what happened? Look at this, look at that, look at the entry over here. This is the entry. Look at what happened over there. Price activated my limit, and I was even sleeping. By the time I woke up, price was around this area, and right now price has hit my target over here. This is my target. Price have hit my target, and it was what, a massive what, profit. This is how you trade. You know, already just today I've made my target for the week on my 4 different accounts. I've made my target for the week, but still, if I see quality opportunity, I'll trade. You understand? Now, if you look at crash 500, okay, look at crash 500 also. I took this zone. I realized no, it's not gonna work. So I gave a second scenario. My student, my bootcamp student, to tell you on the page I wrote there. This is the second scenario. So I lost this, and I lost just what, $1.50 on this first zone. Then look at the sniper entry on the second zone. All right, and what do you see? You see where my arrow pointed to, into that zone, and this guy went right into the zone over there, as you can see, just this evening. Okay, about an hour and something ago, and you can see my target hit. Now just look at the distance. This is my entry, and this is my stop loss right down here. Okay, the trade has completed. Otherwise you would have seen the trade running. It has completed. Now what happened? Look at what I was risking compared to, look at the move up there. Look at what I made. Look at the distance. That is what I'm talking about. The quality of what, of the trade, not the quantity. And my bootcamp students will tell you that I don't just take trades. When I put my chart there, one of them was asking, I don't know if he's on the live stream. Enoch, if you are on the live stream, you can type inside the chat for them. Okay, Enoch, if you are in Enoch or Holido, any of if you are in this live stream, can type in this thing for them. And if I'm lying, you can write it that I'm lying. They'll tell you. My brother Chris Dollars is, I think I saw him. Yeah, he's on the call. He will tell you. They will all tell you, if I put the analysis there, I don't just put analysis. If I put it there, I know what I'm putting there. Why? Because I took my time to look into the market, assess the market. I'm not just looking to jump into the market at anywhere. No, my capital is important to me. I'm protecting my capital so that I can rather take away from from the broker. But some of us are such that we are rather donating to the what, to the broker. Me, if you donate to the broker, I'll be happy. Why? Because I'm going to what, take it from the broker. And this live stream, you can see I said when crash 500 crash 500 gets here to what, it will start spiking. Look at the sniper entry, no drawdown, zero drawdown. Look at the entry. It got there exactly, and what, we started seeing what, spikes. Okay, we started seeing spikes. It went to retest it again, and it is spiking. It's not anything, it's not magic, it's not anything. It's simple understanding of the market, and following what, and following the right concepts, and the what, and the rules. It's just about being disciplined in the market. You understand? It's about what, this being disciplined in the market. Now, if this is your first time here on Mindset Hustle, okay, Mindset Hustle, do well to hit the subscribe button, subscribe to the channel, so that anytime we release new video or we are coming to go live, you'll be notified about it. All right, guys. Also, don't forget to like this video and share it with your friends, so that they can also learn something new in this trading business that we are into. Also, leave us a comment in the live session. If you have any question, leave it in the comment section there. I'll read your question and also display it on the screen and answer you based on that. So the last thing I'll talk about, the last thing, I call them the 3 M's: the means, the motive, and and the motivation. Now, the means, when I talk about the means, I'm talking about the capital. You have to know your capital. Okay, if I talk about the means, it means I'm talking about what, the capital. So you need to know your capital. That is the first M. Now, you and I know that we retail traders, we have less capital. It is the institutions, the big boys, that have the huge capital. All right, so they are the ones that move the market. They are the ones that move the market. So if it is the big institutions and banks that are moving the market, how do we identify their footprints? We have to hide behind their footprints, so that we don't end up becoming part of their trap. Okay, they set traps in the market for us. If you are able to identify these traps that they are setting in the market, you will be able to avoid their liquidation. That is how I call it. Now, the second one is the motive. The second M stands for the motive. When I talk about motive, here I'm talking about whether you are looking to buy at resistance or you are looking to sell at support. Now, you see, big institutions don't buy at support or sell at resistance. It is retail traders. Why? Because at that point in time, we have one touch, two touch, three touch. Then we'll be like, oh, double top, triple top, and go. And we are willing to sell. When we are looking at selling at those resistance levels, they are looking at something we call liquidity. That is money. Okay, that level is where the money is. It is the fuel that they use to drive the market. All right, guys. Now, so the institutions, their motive is that when you are selling at resistance and you put your stop losses above, there is a zone we call institutional funded candle zone, okay, IFC zones or supply zones, okay. They are looking to take out your position, take your stop losses on your sell positions, go into the IFC, and then push the market back in your direction. Then you'll be shouting, oh, I got the direction right, but they took me out and now market is gone in my direction. Yes, your motive was right, but then your entry was wrong. The institutions, they don't trade at those levels. They will be looking to take the retail traders who are looking to do what? To buy or sell at support and resistance level out of the market, and then push the market back in that direction. So that's one thing. And the last M is the mindset. Now, what is the mindset behind all this? The mindset is the liquidity. Okay, liquidity. Now, as I said, liquidity is just fuel. It's just an area where the fuel is just like your car. Without fuel, your car cannot move. Okay, it's just like that. Without liquidity, without the money areas, the market cannot move. All right. and these institutions have large amount of what orders in the market, so they need this liquidity to what, to ginger them, let me put it like that, to ginger them, to give them what, more how will I put it, more positions in the market. Okay, and then that will become a driving force for them to push the market in the direction in which they want the market to what, the market to go. I hope you guys are following. Guys, if you are following this lesson, type yes in the what, in the live chat, and I know that you guys are following. So enough of the talk. Now let's look at some few things on the chart. Okay, so I'm going to show you some few things that you have to look out for when you are you want to make analysis and trade on the live chart. So right now, let's get back to the computer screen and let's look at some few pairs. All right, so first, let me open a new I don't want to clear these things that I've analyzed here, so let me just open a new crash 500 chart. Okay, and then you use that for our example. All right, so now when you take a particular asset and you want to analyze that asset, you don't just start analyzing the asset from just any time frame. No, if you do that, that is the wrong way of going about it. Okay, the first thing you need to do is to look at what the higher time frame is saying. The higher time frame is the key time frame that gives you the directional bias of that asset. Okay, it is what, it is the one that gives you the directional bias of what, of the asset. Now guys, if you really want to have in-depth knowledge into into trading, yeah, you can come and join us at the Captain's Company Limited, and you can enroll in our mastery course, or you can partake in our bootcamp programs that we hold uh monthly sometimes, and sometimes to every 2 months. So it depends on the period in which we are. So when the next bootcamp is out, you can enroll and be part of them and gain more understanding to some of these terms that I'm using. And also we have our mastery course, which takes 2 months, so you can enroll in that as well. The name of our Telegram community is the Captains Community, so you can search us on Telegram and join our free community page. All right, let's get right back into the video. So first things first, as I said, we go to the higher time frame. So in this case, I'm going to look at what weekly is doing, then I'll look at what daily is also doing. Then based on that, we'll be able to tell the directional bias of this particular asset, okay, for the day or the week. So right there on weekly time frame, as you can see, market structure is telling us that overall crash 500 is in a downtrend. Okay, overall crash 500 is in a downtrend. So I made some free videos on this market structure in a series that I entitled How to Trade Boom and Crash Easily. On this channel, you can go to the playlist of this channel and you can get access to those particular videos. Watch them and understand market structure, then you can understand what I'm explaining here. So here, what I normally do is I work between two key structural level. Okay, I work between two key structural level. Already I know we are in a downtrend, so what I did is I know this is my last high. Okay, that took out this particular key level on the weekly time frame. So I'll just mark them, and then that's all I need on the weekly time frame, because I know that the low, the last low on the weekly time frame has been taken out by this red candle here. Good. Now it means we have broken structure. What next? The next expectational order flow that we'll be looking at is price will make a pullback. Is price will make a pullback. So let's look at that. So here, if you go to daily time frame, you can see here that on the daily time frame, we are within the weekly structure. So you can see that is the weekly structure, the high of the weekly structure right up there, and these are the low of the weekly structure. Good. Now, what is the daily structure telling us? So I'm going to work within the daily structure for the intraday trading. Okay, so where is our last high for the day? So this is our last daily high. Okay, you mark it down, and these are what our last daily low that was what that was taken out. Okay, now after that was taken out, we created what a new low. Okay, you only confirm a new low when the previous one is what is confirmed to be what to be broken. Now after this what happened, we see that price begin to what to reverse. As I said, anytime there is break of structure, you should expect that price will make a reversal before we proceed in what in the direction that we were coming from. Now until there is a change of character, then that is the only period in time that we can say market is about to what to change trend. All right guys, so okay, right now based on this, as at that time this daily candle hasn't formed, so I was only basing my analysis on this and this. Okay, now after doing this, you go to the lower time frame. The first lower time frame I always look at is either the H4 or the H2. Okay, any of these guys. So I go to H4 to see what H4 is telling me. Now I realize H4 has a structure here. This was the last high that took out the what this low. Okay, that took out this low. I mark it down because it is very important for me to know where to be looking at taking my profit and all those stuffs. Okay, now what do I look at next? I now start to look for what key levels. Listen to the word, the key word here is key levels. I begin to what look out for what key levels in the market that what that will play out as I want. Key levels are the levels that you need to trade off, not just anywhere in the market. Okay, not that okay you see this big green candle break this high, no, then you start buying, you you see it break this particular area, then oh price have broken resistance level, then you jump into the market. No, we don't trade like that. Once you do that, if you let's say you enter here, you will be looking to put your stop loss somewhere below here. Now just imagine price reverse to this area to hit your stop loss. That is a huge loss. Okay, so you go further down to the lower time frame and you look for zones we call demand zones and supply zones, depending on whether you want to what you want to buy or you want to sell. Mind you, we are in what we are in a downtrend. Okay, but then we are trading a counter trend, which is what which is a buy trade, because we know that structure was broken on weekly time frame. We are expectational order flow. We are looking forward for what a pullback. Okay, we are looking forward for what a pullback. That is our what our expectational order flow. All right guys, so here you can see, if you want to understand a lot of these things, I think as time goes on, I will do some sessions, live sessions, to explain what demand zones are, what uh, supply zones are. Okay, so that you guys can understand most of these things. So here on H4, for instance, if I want to do some analysis down for tomorrow, I'll be looking at this zone, looking at price either coming back to this zone or we selling price from the upper zone here. That is on daily, where price is currently at. If you remember the analysis I showed you over here, where is that? You can see price is currently within that area. Okay, so let's go back. Where is that? Okay, so let's come back here. Good. Now this daily time frame zone is too big. It's too big for us to what to trade. So what are we going to do? We need to what do something we call refinement. Refinement means reducing the zone further down to what to a smaller zone, where you can just have small amount of what risk, where you can just risk very small portion of your what your equity, but then looking to what maximize your what your gain. So here I'll go straight to what I'll go straight to the M15 time frame, 15-minute time frame. Okay, go straight to the 15-minute time frame. So within the daily zone, okay, within the daily zone, so this was how I got my zones. But this one, for instance, tomorrow if I'm looking to buy this asset again, I'll be looking at it from what, this area on the 15-minute time frame. Okay, this is the area I'll be looking to what, to buy. But it doesn't mean that I'll just enter this on the 15 minutes. I'll go further down to lower time frames like what, M5 or what, or M2 or M1 to what, to look for other zones. Okay, this all I'm doing in is what, is to minimize my risk but rather maximize my what, my profit. Okay, now you don't start trading just anywhere. Always look at key areas. Okay, for instance, this is a key area, so if price comes here, I'll by all means look to trade it, you understand. But in the middle here where we have green 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 green, there's no way price will just get here and then I'll start buying again. And I know that there is no institutional order flow area, institutionally funded candle in that what, in that area. That is an IFC in that area. I will not what, I will not go close there. I will not mind anything. I'll be patient. Even if it will take 2 days for price to get back into this zone, I'll wait for price to what, to get back there. Now if I'm looking to what, to take this trade, I'll go further down to either 10 minutes to see, okay, this zone, will I get any less risk opportunity? Okay, M10 is not giving me any better zone, so what will I do? I'm going to what, I'm going to M5. All right, so here on M5 I can see that it is also still giving me the same width as M15. So if that happens, then I'll just leave the zone like that. Okay, I'll trade it like that. It means no matter the time frame I go to, that is the same risk to reward ratio level that I'll get. I will not mind this zone. I'll ignore this zone because I don't see it as a very good key level to trade yet. All right, the reason why I'll be looking at this zone is it is the zone responsible for what, taking out this particular high over here. All right, it is the one, this zone here is responsible for taking out this particular high over here. So this is the main reason why I will be looking to what, to trade that particular area. Okay, that will be the main reason why I'll be looking to what, to trade that particular that particular area in the in the market. Guys, are you with me? It is the only reason why I'll do what, I'll be looking to what, trade that particular area in what, in the market. All right guys, so if you have any question, okay, if you have any question, you can what, you can leave me, you can drop your question in the chat box and I'll answer your question. Now if you need my personal Telegram ID, okay, maybe you want to chat me directly on Telegram, I will drop that in the chat box, so you can just contact me on Telegram. And you can also join my free group where I drops some information most of the time. So do well to join my free Telegram group so that you can be always updated. Okay guys, so guys, if you have any question, if you have any question to ask, you can you can leave me your questions in the chat session and I will attend to you. All right, and I will attend to you. Or maybe you would like me to look at an asset for you, or you have a doubt as you are doing your trading, you can drop your question in the chat box and I'll respond to you. So that is my official Telegram handle and official Telegram free Telegram page for the channel. You can join them and get more information and maybe some daily trade ideas uh, as we move on. Okay, guys. All right, guys. So if there is no question, then I'm going to what? I'm going to end today's live session here. I don't want to keep you with being on this live session for 40 minutes, but then once in a while I'll be doing these live sessions and be teaching you guys some things that you need to know in trading to make your trading a very simple and successful one. Trading is really profitable and you need to be part of this business. It's a business, it's not a gamble. Do well to be part of it and make your life to become more more easier. Okay. All right, guys. Thank you for joining today's live session. I love you all. I'll see you again next time. It's bye bye for now.